A very warm welcome. I am Reeya Khanna of 6th semester course BA LLB section A, and I, along with my teammates, have got the wonderful opportunity to present our topic, functioning of the stock exchange. A stock market is a platform where investors come to trade in financial instruments like shares, bonds, and derivatives. The stock exchange works as a facilitator of this transaction and enables the buying and the selling of shares. This presentation will cover the following points: introduction to the stock market, regulation of Indian stock markets, types of share markets, and how do the share markets work. I shall be dealing with the present issue at hand, that is, introduction to the stock market. Stock markets form the largest avenue for investments. There are primarily two stock exchanges in India: the Bombay Stock Exchange, known as BSE, and the National Stock Exchange, the NSE. Companies list their shares for the first time in the primary market, and in the secondary market, investors can buy and sell their shares during an initial public offering. The two stock exchanges in India have on some occasions witnessed stocks worth 6 crores rupees being traded. The uninitiated in India often consider investing in stock markets gambling, but a basic understanding of the share market can change that perception. Now, I would like to request Karthik Sharma to please shed some light on regulation of Indian stock markets. Thank you.
Hello everyone, my name is Karthik Sharma from BLLB Semester 6A, and my subtopic is Regulation of the Indian Stock Markets. The regulation and supervision of the stock markets in India rests with the Securities and Exchange Board of India. SEBI was formed as an independent entity under the SEBI Act of 1992 and has the power to conduct inspections on the stock exchanges. The inspections review the operations of the market and the organizational structure along with aspects of administrative control. The main role of SEBI includes ensuring a fair and equitable market for investors to grow in. Second, compliance of exchange organizations. The system its practice in accordance and with the rules under the Securities Contract Regulations Act (SCR) Act 1956. Ensure implementation of the guidelines and directions issued by the SEBI. Check if the exchange has complied with all the conditions and has renewed the grants if needed under Section 4 of the Securities Contracts Act of 1956. Thank you.
Singh, and my subtopic is types of share markets. There are two kinds of share markets, namely primary and the secondary market. Primary share market is that the companies register themselves to issue their shares and raise money. This process is also known as listing on the stock exchange. The process of entering into the primary market to raise money, and if the company is selling their shares for the very first time, it is referred as the initial public offering, IPO. Through this process, the company becomes a public entity. Second one is secondary market. The shares of a companies are traded in the secondary market once the new securities are sold in the primary market. This way, investors can exit by selling their shares. These transactions that takes place in the secondary market are called trades. It involves the activity of investors buying from each other and selling among themselves.
Hi, my name is Varun Warrior, and I, along with Priyan Sharma, will be explaining how does the share market work. The first 3 points will be covered by me, and the rest of the points will be covered by Priyansh. Understanding the stock exchange platform. A stock exchange is precisely a platform that conducts the trading of financial instruments like stocks and derivatives. The activities on this platform are regulated by the Securities and Exchange Board of India. The participants have to register with SEBI and the stock exchange in order to conduct the trades. Listing of the company in the primary market. A new company is listed in the primary market through the process of an initial public offering, where the company lists the details about itself, the stock it is issuing, and etc. The allotment of stocks take place during the process of listing, and investors who bid for the stocks get their share. Trading in the secondary market. Once the company has been listed, and issues its stocks, these can be traded in the secondary market by the investors. This is the marketplace for the buyers and sellers to transact and make profits or incur losses. Thank you.
I'm Priyan Sharma and I will be covering rest of the points. So here we go. Point number 4. Stockbrokers. Because of the magnitude of investors who number in thousand, it is difficult to have them assemble in one location. Therefore, to conduct trade, stockbrokers and brokerage firm come in the picture. These are the entities that are registered with the stock exchange board and act as intermediaries between the investor and the exchange itself. When you place an order to buy any share at the given rate, the broker processes it at the rate at the exchange where there are multiple parties involved. Point number 5. Passing of your order. Your buy order is passed on to the exchange by the broker, which is matched for a sell order for the same. The exchange takes place when the seller and the buyer agree upon the price and finalize it. The order is then considered confirmed. Sixth point, settlement. Once you finalize on one price, the exchange confirms the detail to ensure that there is no default in the transaction. The exchange then facilitates the transfer of ownership of the share, which is known as the settlement. You receive a message once this takes place. The communication of this message involves multiple parties like the brokerage order department, exchange flow trades, etc. The settlement time earlier took weeks to materialize, which is now done in T plus 2 days. This means if you trade today, the share you reflected in your demat account in 2 working days time. Investing in the share market is subject to market risk. It is recommended you seek expert guidance before investing. This is the end of the presentation. Thank you.